First on China, again, you wake up to these nonlinear, I guess would be the point, nonlinear central planning surprises, but you also wake up to something that is proactively predictable within the nonlinearity. And what do I mean by that? It's nonlinear because it's a surprise. I mean, this, of course, is the biggest move in 20 years by the Chinese, but it's a 2% move. So again, some would say, oh, ho-hum, it's not that much on an absolute basis. But again, history would tell you that when a country starts to move down the slippery slope of an ideological path, which is the proactively predictable point, it's the first of many. It's the first of many. So the Chinese have done effectively, they've tried almost everything that America has taught them, and Japan has taught them, and Europe has taught them, but now they're going to go to the wood, and they're going to start to devalue their currency. So again, at least every country in modern human history has tried this. You'll note that it hasn't worked, and again, maybe they don't have to be beholden to that reality because they are a communist country, but again, it is what it is this morning. The Chinese stock market, get this, was down 1 basis point on the news, 1 basis point. So they're essentially puppeteering this whole thing at this point. I mean, it's also telling you that the GDP number that they had allegedly in the second quarter, which they reported within a week of the second quarter ending, which was, it's just magnificent. But the 7.0 is just not a 7.0. With down 9% exports, what they're doing now is panicking. So again, they're panicking and they're making moves that they didn't think that they'd have to make this quickly. Again, trying to centrally plan a stock market and at this point devalue the currency should sound very familiar to countries that have panicked in the past. So that is what it is. The regional fallout on that, Thailand, Taiwan, Indonesia, Singapore, big places, at least in terms of what has mattered historically to Asian asset allocation, Asian foreign currency asset allocations, equity markets. These markets are down 4 to 6% in the last month, and if you didn't know why, now you know. Because again, the Chinese are going to start to compete with not only their customers, but with their people. And again, with their people, they lose purchasing power. When you devalue a currency of a person, you can try it at home. You can take a Canadian loonie and just cut it in half, and you'll say, wow, that's worth less than what it was yesterday. It used to be illegal, by the way, in the U.S. To do that. It's called clipping coins. So again, this is what it is. And again, I think that this is going to have much more unintended consequences than any of us possibly can think of right here.